Hello, Bullish Bears viewers. Kind of had a comment that I missed just before our broadcast yesterday for the watch list by a user named Laza Carrotman 4925. Sorry, I need my glasses. That monitor's too far away. Anyway, replied with a couple or a few tickers that he requested, or he or she requested, that I do a little bit of technical analysis on. So I'll go ahead and get that done by special request. I won't be able to do this every time because I'm sure I'll get overwhelmed if I keep doing this, but I feel that I should at least respond with a good amount of technical analysis as promised. I'll do what I can. If you guys shoot me a request every now and then to check something out, very cool. I'll do what I can to get to it. Also, just kind of a reminder, this is purely my point of view. I can't suggest buying or selling, but I can show you what I think of it, what I'm looking at, what I see with technical analysis, and kind of it's on your own accord to decide what to do with that information. Anyway, let's get started. First one was looks like an OTC stock, SESMF, and doesn't have a whole lot of volume leading up to this recent move. Kind of looking at barcoding is usually a little discouraging, especially on a weekly chart. That's a little much. Going into the daily, I mean, there's barely anything viewable there. Not necessarily a stock I would trade. I tend to stay away from OTC stocks, but I'll analyze it anyway. One little trick for low volume situations, just switch to Heikin-Ashi candles. There we go. Now we see some price action. So looking at the weekly chart and the monthly chart, we can see that this has been kind of accumulating for a while, but let's look way left. Here's IPO day. Here's your basic hype sell-off, typical. You've got your accumulations. Market structure is already there. It's been done. It had the breakout, the mean test, and then you had the impulse move there, another mean reversion, and then this ballistic parabolic trend on up from about $16.20. Just didn't quit. But pay attention to this long wick up here on the monthly. Let's go into the weekly. Still there. Daily chart. Now we got a little bit of a picture here. Let's go ahead and draw this out real quick. So whenever you have an impulse move like this and then you see a consolidation, kind of split the mean between the high and the low range of consolidation. I'm going to bring that down just a little bit. There we go. And use that as your reference point for your primary measured move. Even in a parabolic trend, this can be useful because more often than not, you're going to find these little pullbacks and little consolidation patterns that are usually going to be having an outcome of continuation. So let's pop that up. You can see it lines right up with the next one, just about in the mean, and then build one more and you get your target. So 1-for-1 measured moves, highly probable. 2-for-1, not as probable, but sometimes. 1.5-for-1, fairly common. 3-for-1, bloody rare, but it does happen. I've seen some stocks that just continue to run their gills out basically until they eventually find some sort of reason to pull back, and usually that's when you see something like an IPO where you get that. Usually it's an upswing. You'll get a hype wave, I like to call it, and then all the capitalization takes effect, and then you get consolidation forever, a fairly flat range for a while, and then you get this. Well, in this situation, we can see that we've got plainly a 1.5-for-1 measured move. We could see some consolidation set up to continue and hit that upper range target. So although it is an OTC stock, we can put a speculative target on here, about $86 and some change. Make that purple. And I would be very respectful of this mid-range on this measured move condition, because when you break it down to a 2-hour chart, you can see that these consolidations are strong. It's just giant bull flags, but we don't see that here. This may end up giving half back or coming back to support. And although HA candles are not necessarily going to be, indicative of full, normal candles, like if you were to put these on, you wouldn't be able to see this really. It's kind of ticky-tacky. So when you see a wick sticking out of those, don't quite consider that as a liquidity zone the same way you would with just a normal Japanese candle. So pay attention to the fact that it does kind of line up here as a resistance area before, and it eventually did build some momentum out of it. You can place just an idea of reference there so that if you're focused in on tighter time frames, you can know where that resistance level is, and you can see it's about the top of that wick. So take a note of it, but don't necessarily focus on that. Just note that if it does break that, it's likely to hit the bottom of the box, so to speak, consolidate for a while, and if it breaks there, well, it'll give half this one back or even the whole box back. So pullbacks are kind of like that. You'll see that usually they'll give some measure or some indication of what is expected for the pullback move. 30-minute chart, and this is live during market day, by the way. You can see we've kind of broken that pivot, and we're looking for maybe a little more momentum to give at least half of this bar back for the day. Maybe we get the bottom of it. Hard to say. But at any rate, I usually tend to stay away from OTC stocks. So, this is just my opinion on what I can see with this one. All right, moving on. Next one listed was NVO, a typo at first, but I understand that happens to me a lot. NVO. Transpoing stuff is just kind of human nature. It happens. Whether you're dyslexic or not, it's gonna have some sort of effect on you at some point. I seem to remember going over this one a couple weeks back, and I can see that I still have a proposed liquidity zone here, and that was based mostly on this wick here. I don't know why it's shifted. I probably built it on a 2-hour chart. Yeah, that explains it. It's been kind of a liquidity area for a while. So this guy here has made a nice measured move down, and we can see, and I'm going to split the mean here, even though we've got this block here out of the way, measure down, there's your accumulation, and then we ended up with probably a 2-for-1 or better down. Let me just borrow that. So now we have an area where we have a support resistance pivot right there at the base of that block. We don't need this anymore. And go to a daily chart for a moment. So we know that that's a previous support area looking left. And we've been all over this since the days of bagging on Kramer with Matthew and I. This is kind of a dangerous area to enter. This looks a lot like the old Head and Shoulders or triple top to most people. So this is going to kind of be your critical support area. And if things get bearish, you're looking for a pretty nasty bearish target. You can see this little accumulation here. 105 is pretty much the level you're looking for if this breaks. If it wanders through here and starts to consolidate and works its way back above what I call the danger zone, so to speak, it can make another impulse and give half of this last leg back. So we could see 127 or so for a quick reversion trade. But be careful with this. I wouldn't jump the gun on this very quickly because it can obviously rip your face off in some instances, and even today it's done a face ripper. So requested to analyze this yesterday, and I missed the comment because my Thursdays are busy, from the get-go. I do a live stream in the morning, and then I get about a 10-minute break before I get prepped for doing the watch list show with Matthew. And sometimes if there's a comment that happens anytime in the morning, I tend to miss it. That's why I missed this one. I'm not sure I'd jump into this. I'd wait for this to consolidate here and see whether or not it's going to hold that level. If not, we know that there's also a kind of a split back here, and I know gap traders look for these too. You can see there's a gap up here and a gap up here. It kind of makes sense to settle around here. if you're paying attention to gaps, you could stripe a whole bunch of pivots across your chart to keep note of them. But usually momentum is going to carry this entire trend, and day traders will find that these gaps will be useful for legging in and out of positions, or scalping short, take profit, wait for the rebound, scalp it again, and just keep hammering it. So yes, pay attention to these gaps, but you don't necessarily have to worry about it for swing traders. Just note that there is some potential for momentum once this level breaks all the way down to this level. So follow that trend. Wait for this to consolidate. It'll give you a pretty good sign of what it's going to do. That's a pretty obvious bear flag on the 15-minute chart you can see here. That gap down overnight, likely to continue heading south here. If it does by some miracle consolidate and break back above this line, cool. You can go bearish or bullish on it and scalp the half back target. Pretty easy range, right to about 124 or so. But just be aware, this thing's looking pretty bearish. Matthew and I would probably consider this a decent short if Matthew was still day trading as much as I do. But for swing traders, we wouldn't really hold a lot of short position overnight or more on that. But it's been fruitful for some bears so far, so it's likely to keep doing that. Let's see, next on the list we've got APO. This thing at Apollo Global. Oh yeah, this one. Haven't done much on this. A while back someone had me look at it. There was the obvious cup and handle in here. The pullback, there's your handle. Continuation. So looking further left, you go for a monthly chart. It's been parabolic since the get-go. Very little market structure happened here. This thing is just an absolute beast. Coming up to this high here, let's pay attention to this little doji here. Gave us a pullback, gave us a shocking low pullback, kind of broke a support level here, ran down to the next one and bounced. So we found some buyers in that range. Currently we're looking at a pretty obvious measured move from that low. Let's go for about the mean. And we've hit the target for that measured move. Could it go higher? It sure can. Let's just stick a pivot line right about the top of that box, just to give us a reference point. And then we're looking at two possibilities here. If you see a doji like that, and there's two of them here, and then you see this this range here on this candle. So during the day, some people were chasing this a little bit. You can see there's a lot of limit orders that took shape there. Mark that out. That's kind of your critical liquidity zone there. As long as we stay within a range of consolidation that doesn't break this zone too much, we should see consolidation continue to take this higher. That's not a reversal here. This is more of just a big pullback. Typically we would measure this range and then come back for the half back and then continue on higher, but we get the same result just looking at the primary move here and the secondary move here. So if you wanted to consider running a measured move target on this thing after it breaks this resistance level, if it does, you get a pretty obvious target. Pardon the puppies in the background, they're for real. It's my day to watch the puppies. So tentatively we could see a break of this resistance here. It puts us into a target up here, and pretty obvious. This is my analyst target. I would say a full 1-for-1 is pretty likely, or at least a half. Mark that half zone here. But pay attention to this consolidation. It's going to be kind of critical of whether or not it breaks out above this or not. And then, shoot for half a measured move for a good, swing trade if that occurs, and then look for extensions. If it starts to just blast through this area, it'll likely hit the top or pretty dang close. So trade this on momentum. Obviously, it's got some pretty parabolic properties to it. It can run away very quickly. News, I'm sure, is all over this thing. Let's see, there's a little news here. Yeah, definitely a news-affected stock. Parabolic trends are kind of likely on this thing at this point. You can see that it also did what I like to call the stairs up and the window down scenario. So there was some skepticism on earnings, it looks like, but it was a good buying opportunity once it hit support. One could have noted this area where this little wick is sticking up here as liquidity, and it certainly found liquidity there because there were some buyers in wait down here, I'm sure. So now we're looking at primary pullback. That's the half back. You get this hype wave. Basically, people just chase the stock after all the smart money took it right here. This is where retail tends to chase it, and then usually smart money will take some profit on that. Obvious gap here was at least closed. That was a first target. Second target was hit too. Gave about half that trend back and then bounced out. So we split that mean between high and low, stack our box there. That's how we find our expected measured move. We could take it from here. This is a 2-for-1 and 2-for-1 setup with a 1-for-1 done. So 2-for-1's up here. 1.5 is fairly common. 2-for-1s are a little more rare, so be a little bit nimble when you're trading this thing. Just to give my point of view on that. Let's see here. Next stock we have is looking at WMS. Oh, sorry, WMB. Jeez, I need glasses. Well, let's look at the monthly chart. 1-for-1 textbook completed. Pardon the dogs in the background. Settle down, guys. Obvious resistance area here. We can kind of split that in this area. Let's go with the weekly chart. We need a little bit more short-term reference on this thing. Swing traders are going to be looking for profit in this area. If it can remain bullish, we have a chance for a 1.5, but just again, this is one of those ones where you want to kind of be nimble. Don't get yourself too overwhelmed with size on something like this. But again, you have an extension to about $57 here, about the middle of the road, and then a full-on 2-for-1, 65.80. But again, look for consolidation and a break above this level. So we're looking for a break above about 47.5 or so, and then we need to see momentum take it for the next move. And you can see the consolidation on that bear flag was just methodical. It gave us the second impulse measure outside. It broke it, tested it for support, and then continued on. Came back and tested again. Very typical. When a market breaks a resistance level, usually it'll test it for support and then carry on if it's going to be continuation. If not, you end up with half back. Very typical. So yeah, this one's looking like it could show us some more bearish momentum on the weekly chart. Let's switch to the daily chart and kind of look at what we're seeing here. We're pretty much in the first impulse of a potential flag here, so probably looks something like this. So watch for this flag to give you a continuation sign. Of course, watch the second impulse to the middle for a breakout qualifier. It's got to break this high and get some momentum above that pivot between the two measured moves here. I'm going to adjust that down just a little bit. 47.50 would be a better number. There we go. So we need to break resistance, give us some momentum through this pivot, and then we can maybe qualify for a 1.5 or a 2-for-1 and continue on higher. Seems to be a decent company. I don't know much about them, but they seem to pay a dividend, so this is probably aimed at growth and of course paying back the investors with dividends. Usually comes from their own money, so dividends kind of attract long-term investors. That's kind of what these kind of companies will do to keep people interested. I'd have to look at the options chain to see if it's worth selling options on. In this case, it's looking like a fairly easy swing setup. Just let it play out, let that continuation form, and then give you a clue above that pivot, and then we'll see if it goes higher. Worst case scenario, it gives you a very good opportunity for a pullback. Not saying you would want to short something like this because growth stocks tend to surprise people who short them. You can see here this was some entity shorted it a little bit and then got caught up. Hopefully they covered, because that was a pretty easy recovery there. That's usually what causes these kind of bull flags to continue to build. Anyway, I think that's about it. Thanks for the comment. And again, I will try to do this as often as I can. But if I end up overwhelmed, I do apologize in advance. Sometimes I get a lot to do during the week, aside from my own trading. So it kind of catches up to me, and I'm grateful to be able to help anytime I can. But if I get overwhelmed, I'll just do the best I can with it. But feel free, shoot me some comments, requests, any technical analysis on anything, and I can kind of give you my point of view on it. I'm happy to. And even if it's an OTC stock, I'm happy to look at it. Charts are usually pretty accurate at giving us clues to what to expect in the future. So that's what we do here. And at some point, I might even get Matthew and myself in here to get some, a couple pairs of eyes on the chart. And Matthew's pretty insightful about running with, moving average type setups. I'm more of a what happened before type of guy, so I look at previous moves, and usually I can plot pretty accurate targets by using this system. And I have a couple other tricks up my sleeve too, so we'll be paying attention to this one. I think I'm going to put this in my notes for being on my watch list potentially, and I might start talking about this one a little bit more in the future. So thanks for the request on this, and oftentimes I can find stuff to add to my watch list based on input from you guys. So feel free, shoot me some comments, and we'll get things rolling. Thanks again, and we'll see you next time.